Okay, everybody, welcome back to the Wilton Report. It is the video/podcast dedicated to all things Princeton real estate. That is Princeton, New Jersey. There are other Princetons in the United States. So today we're going to talk about the rental market. Really an amazing time in the market. If you missed our other broadcasts, which we put out recently about the resale market, please check it out. It will definitely lend itself to context for the data that I'm going to walk you through today. But that being said, let's get right to it. We have a lot to talk about. I did want to announce on behalf of myself, 𝐂𝐎𝐍𝐍𝐄𝐂𝐓, Vanessa Shives, my partners in this business. So we have rolled out 3 companies so far in our young history as entrepreneurs. Queenston Realty, obviously, right? If you're in Princeton, you'd have to be blind, probably not to see our signs out and about. We launched a title company. It's called Princeton Abstract. It is agent owned. So our associates who work with us have an equity position in that firm. So agents, if you don't have that at your current firm, shoot me a text. And then we rolled out Princeton Property Management relatively recently. And we're very excited to announce we just rolled out another company. It's called Queenston Referral Associates. It is designed for people who have a real estate license and do not want to be an active realtor, or B, active realtors who no longer want to list and sell real estate and want to have their license in a holding pattern. You can check out the website at queenstonreferralassociates.com and see what that is all about. But that is our latest offering. We have another one coming up in a few weeks. Yes, we're rolling out another company, so excited about that. But let's get to the rental market in Princeton. So again, I guess you could say this broadcast is for landlords, tenants, aspiring landlords, property managers, whatever. It's for everybody. So what's going on in the market? We're going to kind of loop back. So again, if you haven't checked out the other broadcasts I just published about the resale market, I went into a pretty high level of detail about the overall lack of inventory. So this is active housing inventories for sale by month. It takes us from 2017 through today. And you can see this is the Philadelphia, County, Wilmington, Delaware, Maryland market. So in 2017, we were at 22,000 homes for sale, active. We're down to 7,900. I've never seen anything like it. Obviously, we're going to go into a little bit more detail on the rental market. But again, please check out the other broadcasts we put out. I'm showing you this in the rental broadcast because supply is tight in the resale market. There's not a lot out there. Very, very challenging environment for buyers. So, the resale closings in Princeton, for those of you who did not see the broadcast, the number of homes sold year to date in Princeton, January 1 through March 31, from 22 to 23. In 22, there were 67 transactions that closed. And again, that was a low, that was a historic low. In 2023, 36, a 46% decrease in closed homes in Princeton only. This is not Mercer County. This is just Princeton year over year. So, January 1st to the end of the first quarter, March 31st, the number of homes, not rentals, homes sold is down 46%. That is catastrophic. So what does that mean? It means their buyers are desperate, is what it means. It means we're at a historic low. It means if you're a seller, it's a great time to sell. The number of homes that have come to the market in Princeton, this is resale. Again, this is homes for sale. Just to give you context for the rental market, is down 25%. So it's a pretty tough environment for buyers, pretty good environment for sellers. But it lends context to what we're going to talk about. So interestingly enough, rental listings are up 17%. But again, at historic lows, people are opting for 2 and 3 year leases because they have nothing to buy. So we did see a little bit of an uptick in rental inventory, 29 to 34. So a 17% increase. But again, that's so negligible. There's just not a lot. So if you took the rental listings and the closed sales, that's 100 homes, right? Closed rental transactions up, it's not 50%. I apologize. That's a typo. Up about 30%. year over year. So we went from 33 from 22. And again, if you think back to this slide, right? So resale closings 36, rental closings 33. That is not a lot. That is not a lot of housing available for the people who want to move in, which is why if you've been to a public open house recently, you'll see 10, 20, 30 people at an open house because they're looking for housing. It's number 2 on Maslow's hierarchy. So rental closings are up a little bit. The volume of rentals is up rather significantly. So last year through the end of March, $124,000 in rentals closed. This year, $161,000 worth of rentals closed. That's the gross rental price. I put the median in there, though I don't think it tells the story right now. Last year, the median rental price for everything in Princeton was $4,000. This year was $4,113. But let's go to the average price. So this is the average price for a rental in Princeton. Last year was $3,881. This year, $4,771. That is a massive increase. It's 25%. That is an extra $100,000 basically in a mortgage payment. So right now, the average mortgage payment is about $600 per $100,000 borrowed. So basically, that's what happened, right? It went up $100,000 more actually worth of a mortgage payment. So rental prices are going up. They are not coming down. Despite, I think, the earlier predictions that were being made. I never thought they would be retracting in Princeton for the reasons we're talking about today. But the overall rental price is up, I would say, catastrophically. So what does this mean? It means tenants are paying more, number one. But it also means landlords, if they're coming to the point in their life or their business where they might be thinking about selling, they're probably not that motivated to sell the property because they're collecting more rent than they ever have before in their life, or at least in the life tenure of their ownership. So the list to sale price ratio, say that 10 times fast, is about the same, which is interesting because last year landlords got 98.8% of their asking price. This year they get 98.3%, which is not statistically significant, but that's on a 23% increase in the average price. That's pretty crazy. So tenants are paying because they have to. It just is what it is. The single family average rental price, and this is why I don't think the median is telling the story. Last year, if you wanted a single family home, this is not broken down by bedrooms. This is just a single family detached home, $4,690. This year, $5,925. That is a massive jump in average sale price. Average rental sale price, I should say, year over year. And that's just through the first quarter. So we'll see what the rest of the year has to bring. Days on market for the single family rentals did increase a little bit, to be expected, I guess, when your prices go up that significantly. There were a couple outliers that were rather egregiously priced that finally rented. So that sort of blew the bell curve on that. But again, landlords are going to be willing to wait for an extra $1,200, $1,300 a month because they're probably going to get their number. It just is what it is. So list to sale price ratio for single family home rentals. So again, the single family rental average went from $4,690 to $5,925. Landlords are getting 6% more list to sale price ratio on that product. It just shows you there's a massive demand, and I would say massive pent up demand in the Princeton market for housing. I would say we're in a housing crisis, is how I would actually describe it. So if you look at the average price for condo, townhouses, and rentals, and duplexes, I should say, not that much of an increase. I can't say I'm surprised by that. I think you're going to see an increase in that space because the number of townhouses and condos that have come to the market this year, I think it's down like 35% or something like that, or if not more. So it's rather catastrophic in terms of what's happening for buyers. So as buyers are forced into a decision if they want to live in Princeton, they will gobble up anything that comes to the market for rent. So I do think that you're going to see upward pressure on the condo townhouse rental price as the year goes on. But that again is pretty high. The average sales I'm sorry, the days on market, that's a little bit of a typo, excuse me. It did go up from 18 to 46. There was a couple of outliers that had been on the market for quite a while that finally rented. The market caught up to them. So that distorted the average. But again, buyers don't wait. The average rental is going to go in a matter of days, especially the less expensive ones. We just rented a couple. Literally, we didn't even put them on the market. So it's a massive demand between the university and everybody else that wants to be in Princeton. So the listed sale price ratio for rentals for condo, townhouses, and duplex landlords are getting 97.6% of their asking price. Overall, it's a little bit of a decrease, but not anything worth mentioning. It just is what it is. So I wanted to bring your attention to 118 to 120 Lee. Okay, so this is a duplex in Princeton in the John Witherspoon neighborhood. So this is both sides of the house, the left side and the right side. So why am I bringing this to your attention? This is not our listing. You can see there's a copyright on the photo. This was represented by another broker to the market, but I want to give you an idea of the pressure on pricing in Princeton, not only from a resale perspective, but how it's going to translate into future rental pricing for Princeton. So last year, on February 22nd, 2022, 118 to 120 Lee sold for $800,000. It didn't go to the market. It sold privately. Maybe they didn't maximize the value of what they sold it for. I don't know. Hard to look back and say, but I can tell you that this year, literally last month, the same house, 118, 120 Lee, came on the market for $1.2 million. That's $400,000 more than last year, and it sold in less than 11 days. So again, if you are a PhD economist, you would predict that if a landlord had to pay $400,000 more for a product in a year, rental prices will continue to go up in Princeton due to the lack of available inventory. That will not change until Princeton and every other municipality in the state figures out how to build more housing. So that is it for today. Just a quick recap on the rental market. Prices are continually trending up in the rental market. So landlords, good for you. Tenants, don't despair. It is what it is. It's all about just securing the housing. And that is it for this edition of the Wilton Report. You can always find us on Facebook, Instagram, LinkedIn, and Twitter. So please reach out if you have any questions. Thank you, everybody.